Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope you're having a great weekend. Next week is a big week. We have 4 interest rate decisions, and so picking your trades carefully next week is going to be key. And I'm going to show you in today's video how I think that can be done with the Forex majors. Okay, so quick look at the economic calendar. You can see not only do we have 4 interest rate decisions coming up next week, but we also have inflation data out of the US. This is very, very important because the inflation data has been a big driver of the dollar, and as the global reserve currency, this has been driving other markets as well. So on Tuesday, we have the inflation data out of the US, and then on Wednesday, we have FOMC out of the US. And then we have interest rate decisions on Thursday out of Switzerland, out of the UK, out of the EU. So this is why I say picking your trades carefully next week is going to be key. And the final data point to really pay attention to was this PPI inflation data out of the US on Friday. Why is this important? Because it came out hotter than expected, and PPI tends to lead CPI because what that's telling you is inflation or prices for businesses went up over the course of the month, more than expected, and usually businesses pass those on to the consumer. So this adds weight to the idea that we may actually see slightly hotter than expected inflation out of the US on Tuesday. So just bear that in mind. Okay, so quick look at the scorecards before moving on to the charts. And you can see in the previous weekly Forex forecast, it has been the Canadian dollar that I've been highlighting as the best opportunity in the majors, and CAD shorts have been fantastic opportunities over the last couple of weeks. Coming into this week, CAD shorts are still highlighted as the best opportunity in the Forex complex, although they may be slightly overextended as it currently stands. I think we're going to need some pullbacks near term first. We'll look at that when we look at the charts, but CAD shorts are still number 1 priority on my shortlist in terms of the Forex markets. And to the upside, I would like to be looking at the CAD vis-a-vis the pound, the euro, the New Zealand, the yen, and also the Swiss franc. But we're also going to be looking at the Aussie and the dollar vis-a-vis some of these markets as well, like pound Aussie to the upside, euro Aussie to the upside, Aussie New Zealand to the downside, Aussie yen to the downside. Now, going into next week, because we have the CPI data and FOMC, we are going to look at a couple of opportunities in the US dollar, which means we can be reactive from the events as opposed to trying to predict them. So I am going to be looking at a couple of dollar pairs which will benefit from dollar strength, and setups which will benefit from dollar strength from those news events next week. And also we're going to look at a couple of US dollar short opportunities next week. Again, waiting for those events to take place, seeing which way the momentum goes, and then looking for the follow through, being reactive in terms of trading the US dollar next week. Okay, so quick look at the individual currencies here. Just as it's good practice to look at these, I know they mirror some of the pairs, DXY mirrors euro dollar, etc. But it is good practice to look at the individual currencies, especially in the daily chart, just to get a bigger picture view of what's going on before looking at the pairs. Now, with the DXY, you can see we had a big sell-off to the downside, and we are sitting right at a previous low, which was actually the previous target, and we're struggling here. And not only are we struggling here, but we're failing really to break the lows with momentum. This is usually the precursor to a reversal. Although these are just the technicals, really we know that next week CPI and FOMC are going to have the big effect on the dollar, and those are going to be the main drivers of the dollar next week. So depending on what happens in those events, that is what I think is going to catalyze the next move in the dollar. So what we really want to do with the dollar pairs, and I think the dollar pairs are going to provide some of the best opportunities next week. Why? Because we have those dollar events right at the beginning of the week. We do have the EU interest rate decision later, which can affect the dollar, but because we have those dollar events at the beginning of the week, we get them out of the way, and it basically sets up the rest of the week for follow through in those markets. The other pairs, which involve the pound, the Swiss franc, and the euro, the problem with having interest rates, out on a Thursday is you may find those markets just correct and chop and do nothing pretty much all week into Thursday. That's why, in order of what we're looking at on the right-hand side, I like the yen pairs the best next week because we don't have the risk event per se, although because they're risk on, risk off, if you get a strong rally in the dollar, this is likely to put downward pressure on Aussie yen, CAD yen, etc. But generally speaking, they are avoiding that risk event directly. And then after the yen pairs, which are my favorite plays next week, I like the dollar pairs because the dollar pairs have that risk event early on in the week. And then after that, you can look at the pound, the euro, and the franc pairs. But I do think next week, if you can just take a couple of pairs, probably after the US data and they work out, or the yen pairs, that's really all you're going to need next week. It's not a week to be taking huge amounts of risk. So I do think on balance, we probably see the dollar snapping back, and you're going to see in the New Zealand dollar why I think the dollar itself is in a bit of a place where this has more upside risk than downside risk. And I do think we're going to see at least a correction in the DXY near term. Next is the euro. Now the euro is doing the same, but just inversely. It's struggling at the highs here. We do have the 4-year breakout of the 1.06710. So do we pop up a bit higher before CPI and FOMC and then reverse? Maybe, but I do think those events next week, more than likely, although we're going to be looking at opportunities to the upside or the downside in the dollar based on what happens, I do think, if I had to guess, that it's going to catalyze a reversal in the euro and a reversal to the upside in the DXY. So out of all of these markets, the euro pairs are really exposed to the news next week because we have the US data coming out Tuesday, Wednesday, and then on Thursday we've got the euro data. So those are markets that could get very choppy next week. Next is the pound. We had the flash crash and we've been correcting ever since. And we've had such a strong rally here that we took out the previous high, which was highlighted as the target last week, and we're just kind of stalling out here. So again, we do have the US dollar data, which is likely to affect the pound, and the UK data. So this market could get quite choppy, but I do think we're in an area where this could also start to roll over to the downside. Next is the Swiss franc. I highlighted in previous videos the significance of this move. This is the kind of move you see generally in big risk-off events, and you can see this was a major double bottom confirmed over here, and we're not failing here. You know, we've broken this double bottom, confirmed it, and if this was going to fail and roll over, you would usually start to see this failing and rolling over pretty soon. The fact that we consolidated underneath here and we're making higher lows, and now we're breaking the high again, that is actually indicative of a bigger breakout. And I do think you need to pay a lot of attention to the Swiss franc pairs because they are potentially on the verge of major breakouts. So of course, if the Swiss franc breaks higher and we go into a third wave here after we've consolidated right underneath this confirmation here of this double bottom, that would be Aussie franc to the downside, CAD franc to the downside, etc. Next is the yen. This has been one of the bigger beneficiaries of the DXY sell-off, and we are now stair-stepping. We had a big move. We have started to have a short covering rally, and we are breaking a minor inverse head and shoulders here. And I say minor because it's on the daily. This is not head and shoulders on the bigger, weekly, monthly, quarterly, but it is still very significant. Even though it's on the daily, this is a significant reversal. And we are consolidating above the previous high. Now, if the Japanese yen, maybe it comes back and flags a bit like this, I still think this is an area you really want to be keeping your eye on the yen pairs, because a push up high here, especially when you get a pattern like this which confirms, pulls back, retests the breakout point, that is very often when you see sharp moves. So keep your eye on the Japanese yen alongside the Swiss franc. It does seem to be indicating quite a big risk off event incoming. Next is the Canadian dollar. Now, I have been highlighting that this should just be considered a big bear flag, and we are heading back down to the lows and probably onto the 0.7088. We have started to roll over, but bear this chart in mind when we look at the other commodity currencies of Aussie and New Zealand. Why? Because they have not yet started to roll over. But I do believe what you're seeing here in the Canadian dollar, where this is starting to roll over back to the lows, I do believe this is exactly what you're likely to see in the near future in the Australian dollar and also the New Zealand dollar. And as those markets do that, I do think that's when we're going to see a snapback in the DXY, because as commodity currencies weaken, you tend to see the money going into the safer haven assets like the dollar and the Swiss franc and the yen, which, bear in mind what we just looked at, also look like they're set for bigger appreciations. Next is the Aussie. Again, likely going to be determined by the events going on next week, on a risk on, risk off basis, even though it's not directly looking at an interest rate decision itself. But again, you should be considering this a big bear flag. And we're really struggling at the highs here. We had a massive outside day over here, and we're kind of slightly recovering. Nothing to say we can't come back up and retest the highs, maybe push a bit higher. But in terms of risk reward, it does look like we're starting to get to the point where upside is fairly limited and downside very much all the way down to the lows and onto the 0.6124. Now compare this to what we just looked at in the yen, And this sets up some potentially bigger moves, as I've been highlighting on Twitter, in markets like Aussie yen. And finally, if we look at the New Zealand dollar, you can see this has been the strongest of the commodity currencies, and that's not really surprising because it's been highlighted in the scorecards as the most likely commodity currency to outperform, and that's exactly what's happened. And if you look at this is not offset. I want to show you this in the bigger picture because this goes back to what I was talking about in the dollar, being in an area now where upside is, in my opinion, the much greater risk than downside. And I know the New Zealand dollar is not in the dollar index, but it does move inversely with the dollar on a risk on risk off basis. You can see over here in 12 weeks, the New Zealand dollar crashed 19%. And within that crash was a recession and the 2020 COVID sell-off, which saw a flight to safety. And if you look at the 13 weeks from the low, we rallied 20% in the New Zealand dollar, and that was on max stimulus from the Federal Reserve. Well, over the last 9 weeks in the New Zealand dollar, we've rallied 17%. 17%, nearly the same as we rallied, not far off it, only 3% in the 13 weeks after max stimulus from the Federal Reserve was put into the system. We're looking at a 9-week, 17% rally in the New Zealand dollar in the face of renewed tightening next week from the Federal Reserve. So what we're looking at here really is not aligning with the macro fundamentals, and I do think it's only a matter of time that this short squeeze, this short covering rally in the New Zealand, which was really given fuel by that soft CPI print we saw recently out of the US. I do think this starts to roll over, and I do think there's a very good chance we're coming down to the 0.54660, possibly in Q1 of next year. Okay, so let's look at the markets themselves, starting with crude oil. We took out both targets to the downside last week. Crude oil has been a great short, and in fact, right in this area was a fantastic opportunity to short this, went out as a note to members, and we had a really good sell-off, and we're struggling. Now we've traded into those lows, we are struggling in crude oil. I do really like crude oil shorts, but very much like the CAD pairs, I think we need to see a correction first. So any pullback in this area is viewed as an opportunity to look for shorts once again, down to the 67.90. Keep your eye on this. Yes, it may need a correction first, but I do think crude oil to the downside is a fantastic opportunity. One of the better ones that we're looking at here next week. Next is CAD yen. CAD yen has also been a fantastic short. We had this consolidation, and then after we broke this consolidation, we had a down leg, and it looks like we're consolidating a bit. So again, I do think the chances are we pull back into this area. Any pullback in this area is viewed as an opportunity in CAD yen to look for shorts, down to the 97.80. Again, we do not have the interest rate decision directly from the CAD or the yen next week, so I think this is one of the best pairs to look at next week. Just bear in mind, it will likely be affected by the other events going on, but I think this is one of the best markets to look at next week. Next is Aussie yen. Now, normally we look down in order of these, but we're doing it slightly different this week because of the events going on. Aussie yen also doesn't have directly interest rate decision, so after CAD yen, I do like Aussie yen. These are my two top pairs heading into next week, alongside crude oil, and also we're going to look at gold and silver. But any pullback in this area, continued pullback, because we've already started to correct, just viewing this simply as a bear flag. Any pullback is viewed as an opportunity to start to look for shorts in Aussie yen, down to the 90.53. But to get here, we would have to break the 90.834. Now, anybody who follows me on Twitter will know this is a major head and shoulders reversal point in Aussie yen. So if we break that with momentum, you may actually want to consider whether you book your profits at the 90.53, because we could be coming down in a much bigger way in this market once we break the 90.83. Next is pound CAD. Now, we do not have an interest rate decision out of the pound until later on in the week, Thursday. So there is a good window of opportunity before Thursday to get involved with this market. I think all these CAD pairs are due a correction, so any pullback is viewed as an opportunity to look for longs into the 1.6828. Just bear in mind, every market highlighted in blue has exposure to the events that are going on next week. So these markets carry risk event. In truth, they all carry risk event because of the dollar and the euro, etc. But these are the most exposed to the events going on next week. So if you want to avoid that risk event altogether, there's nothing wrong with just looking at the opportunities which are not highlighted in blue next week. Next is EurCad. Now, any pullback in this market is viewed as an opportunity to look for bullish breakouts. I'm going to be looking up towards the 1.4629. It is on the list because of the asset selection of the scorecards. However, Again, it does carry event risk next week, so if you want to avoid those, as I said, just don't trade the ones in blue. Next is CAD franc. We're quite close to the target here, so what I'd like to see is I'd like to see this pull back, probably taking out this high so we get a proper correction here. That is going to be the opportunity next week to start to look for bearish reversals. Perhaps we get that off of the interest rate decision on Thursday, so we correct into the interest rate decisions in these, and then we get the sell-off in direction of the scorecards. That would be fantastic for a follow-through trade down to the 0.6818. Next is New Zealand CAD. Now, this rally in New Zealand CAD has been somewhat outrageous when you go and look at it on the weekly chart. I do still favor moves to the upside in this market. So any pullback next week is viewed as an opportunity, and it's not directly exposed to the events like these markets in blue, but you are going to see this affected probably by FOMC and even the CPI data because of the states of the dollar. But any correction is viewed as an opportunity to look for longs into the 0.8807. Next are the Aussie pairs, but the ones which are exposed to that risk event outside of the yen. And you can see last week we took out the target at the 1.8190. Going into this week, we're already correcting and consolidating. So any breakout of this correction is viewed as an opportunity to start to look for bullish setups into the 1.8508. EurAusd, another market which took out the target last week. We are already consolidating, so what I'd be looking for is any reversal in this market. Again, perhaps this comes on Thursday. Perhaps you have to wait for these events because very often these can just correct and consolidate. And then we get the rally on Thursday. If that's the case, look for the follow through to the upside into the 1.5839. Next is Aussie franc. Now, Aussie franc is a very, very interesting market because we're setting up quite a big head and shoulders here. We have that event on Thursday out of Switzerland. However, this is, out of all of them, this is probably the news event I would be most likely to get involved with, is those franc pairs before Thursday. Any continued pullback in this market, I do think this represents a good opportunity to look for shorts. If we break the low here, we could see this breaking with momentum because of the size of this. And I'm going to be looking down to, in the near term, the 0.6208. And the final Aussie pair here is Aussie New Zealand. We've started to pull back. Any continued pullback would be great as it gives us better risk towards the target. Any pullback is viewed as an opportunity to start to look for shorts into the 1.0518. Okay, so moving on to the dollar pairs, and I am going to be interested in the dollar pairs post CPI and FOMC next week. And the dollar pairs that I actually like the most are gold and silver. Why? Because we do also have the euro interest rate decision later on in the week, which can affect the dollar and also especially the euro with euro dollar. However, gold and silver tend to be slightly less affected by those other interest rate decisions and risk events. Therefore, I do think the best long short opportunities for the dollar pairs post CPI and FOMC next week will be in gold and silver. And it will be gold to the downside, silver to the upside that I'm primarily interested in. However, in terms of the Forex pairs, we are also going to look at these four here. And the first two, euro dollar and Aussie dollar, are based on dollar strength post CPI FOMC. If we get euro dollar just correcting, consolidating, and then we get a rally in the dollar from those news events, I'm going to be looking for a pullback and follow through in euro dollar to the downside. And the next big support area is all the way down at 0.9977. The second dollar pair I'd be interested in next week post FOMC and CPI, if we get dollar strength, is Aussie dollar. Now, if we start to correct, maybe we even test the highs one more time and then we sell off with a dollar rally post FOMC or CPI. I'm going to be looking for a follow through and I'm going to be looking for shorts down towards the 0.6493. The next two dollar pairs are based on dollar weakness from CPI FOMC. If we get dollar weakness, what I'd be looking for here, especially the yen to be one of the best beneficiaries of that as it has been recently, any continued pullback and then a reversal to the downside from CPI or FOMC, I'm going to be looking for a follow-through trade down to the 133.59, and if we break through here, onto the 130.62. And the second Forex pair I'd be interested in if we get dollar weakness from CPI FOMC is pound dollar. Any pullback in this area, and then we get a rally, so we get a correction and then a rally from CPI FOMC, I would be looking for a follow-through trade to the upside into the 1.2458. Okay, so wrapping up with gold and silver and starting with the gold-silver ratio, you can see gold is trending to the downside here, and I am looking further declines in the gold-silver ratio. That means I would prefer to be short gold and long silver heading into next week. And that's why, based on what happens with the dollar, if the dollar strengthens, I would prefer to short gold. And if the dollar weakens from FOMC CPI, I would prefer to be long silver. So starting with gold, we did come up and take out the target at the 1807.16. So any continued move higher in gold, if we then get a sell-off, a sharp sell-off from CPI FOMC, I'm going to be looking for a consolidation, and I'm going to be looking for a follow-through trade down towards the 1681.76. Doesn't have to happen all in 1 week, but that is the next key of support to the downside. Next is silver. Now silver is on the long side here. So if we get a correction and a consolidation, and then we get a weak dollar post CPI FOMC, and we get that initial rally, that spike to the upside in silver, I'm going to be looking for a correction and a pullback and a follow through trade into the 24.05, and if we break through here onto the 24.67. So to summarize, if we get a strong dollar from CPI FOMC, I'm going to be looking first and foremost at gold shorts, then euro dollar shorts, Aussie dollar shorts. And if we get a weak dollar or a sell-off of the dollar from FOMC CPI, I'm going to be interested in long silver, followed by short US dollar yen, followed by long pound dollar. So those are the reactive dollar plays that I'm looking at next week post CPI FOMC. And last but not least, we have Bitcoin. Looking at this in the daily chart, we are just correcting, consolidating. The big moves are coming to the downside, and so I am looking further declines in Bitcoin. Any continued pullback is simply viewed as an opportunity to short this at a better price. It's not highlighted as one of the best, but I would be short on balance, looking for the 14,858.30. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. If you enjoyed today's video, why not consider joining us during the week, where I share my charts as well as the setups that I'm personally looking at trading with members on a daily basis. And we also publish the scorecards for over 75 markets in different asset classes, including Forex, stocks, bonds, and commodities. You can find out more about the benefits of GMT membership by clicking the links in the description below and also in the pinned comment below. So thanks for watching. The only thing left to say is take care and don't forget to trade safely.